how to prepare for the next economic crisis.
Caputo and Partners, SwissBankingLawyers.com. We fight for your money.
In this video, you will see investment solution, how to survive the next crisis if there is a crisis. So how to invest to survive the crisis, how to best invest to survive the crisis, and maybe it's also possible to make performance, not only as a protection, but also the combination with performance. Maybe is this possible? How to best invest? These questions will be answered today by a best-in-class Swiss asset manager, an asset manager who has really a track record. Hi Olivier, it's a great pleasure to have you here today and to listen to your answer. What solution can we give to the audience, to our subscribers? What kinds of investment solution can we give in order that they survive a financial crisis, a financial collapse, or whatever will happen, recession or depression? We don't know what will happen. So, or even a small crash, or there are different scenarios. But how to invest to survive this, any negative scenario, if they will arrive, how to be on the safe side.
Well, Enzo, first, thank you for having me.
It's a great pleasure.
And I will try to outline my thoughts on this vast subject. First of all, you have to remember, in the last kind of 20 years, we had several crises, economic crises. It started in 1997-98 with the so-called Asian crisis.
Stock market crash and everything.
Stock market crash, but it was especially a currency crisis in Asia. It started in an unlikely country, in Thailand. But the contagion was so big that the whole of Asia and Russia really brought the consequences. A few years later, we had the dot-com crash.
Yeah.
So that was exuberance in the stock market in terms of internet-linked stocks.
Bubble, the internet.com bubble.
Absolutely, that was totally different from the former crisis. And then 6-7 years later, 2007, 2008, we had what we call now the big financial crisis, which was very severe and which had totally different origins, which emanated in the United States in the subprime lending sector.
But now we have 11 years of a very good period, no crisis for 11 years. So that's why people are so afraid, and that's why they are afraid that something will happen, or they even say something must happen. You know, we have different guys here, we have different guys in the internet. I don't know if they really manage, like you, third-party assets, or if they are only predicators, but they say we will have a major collapse. For example, Ray Dalio says cash is trash. For example, you know, just to give you an example,
right.
In Germany there is another famous hedge fund manager, I don't want to mention the name here, he says to be protected you should invest 30%, a third in physical gold, a third in real estate, and a third in selected stocks. Maybe I want to hear from you, what do you think is a good prevention strategy or protection strategy?
Well, the difficulty first is that you don't know when the crisis will start.
Very difficult.
Which means that you have to have a protection at all times. So you have to adapt actually constantly to the evolving situation. It is true what you said. We had a very, very long time now without any significant crisis or drawdowns in the market. So the likelihood that there is a crisis coming gets bigger by the day. But something will happen.
Something will happen.
Right. So how can you protect yourself best in this scenario? You mentioned that German hedge fund manager who advises clients to invest a third in real estate, a third in gold, and a third in stocks.
Exactly.
I could actually basically live with this, but you have to fine-tune it, of course. Real estate is certainly a very good diversification. It's hard assets. The downside is it is not liquid.
Yeah.
If you need cash immediately, well, try to sell in a down market your real estate. It will be difficult.
You cannot sell like this.
No,
Yeah, yeah.
but it keeps the value, especially if the location is ideal in big cities, great locations.
In good locations, and that's important. You have to
yes,
invest in
that's
good
very
locations, yeah. And to don't invest outside in the countryside, to invest in centers where new people is coming, new immigration, young people, and
Yes.
maybe to invest also in small units, for example, 1, 2, 3 rooms apartments and not big villas or whatever, so small
It
units.
must be marketable.
Yeah, marketable.
And of course, a $20 million villa is harder to sell if you have to sell than an apartment which is worth $500,000.
This is also an important principle, generally spoken, in the asset management industry. You always have to invest in investments who are liquid, to keep it liquid,
Sure,
and not in
absolutely.
life settlements, for example. Life settlements are very illiquid. You even know
Yeah.
when they become liquid one time, you know.
I would agree. The other third is, for example, stocks.
Yeah.
To have a third in stocks makes sense because the great thing about stocks is that you can get rid of them virtually immediately. I mean, in a couple of minutes, you can sell what you have.
Yeah.
On the other hand, you have to know where to put your money in stocks.
You can make tremendous mistakes by investing in
yes,
stock.
of course.
You can fall in love with a specific stock and concentrate a lot of money in just one stock and then lose it.
The key is at the end diversification.
Diversification.
You never put everything into one single basket.
So never put your eggs
No.
in the same
No.
basket.
So
I also
you have
fully,
to
I fully agree.
diversify throughout countries, throughout different types of stocks. Nothing against technology stocks, but they had such a great run in the last few years. Can it get any better? I doubt a little bit. Of course, you have great companies around, but valuations are very lofty. Other stocks are maybe overlooked, and also for a reason. Do you want to invest into utilities? Probably not. They are cheap, but they're going to remain cheap. And they might be even cheaper. You know that utilities, despite the attribute of being conservative, they lost most in all the crises.
Wow, wow.
So
But
don't
in a-
invest in them.
Okay, but in a crisis there are services and products who are
Yes.
also need in the crisis because
Correct.
people doesn't disappear because the crisis is arriving. They have to eat, they read newspapers, they need...
You're absolutely right.
So you have to focus on companies,
Defensive consumer
Yeah.
stocks.
defensive consumer stocks.
Absolutely. Companies who produce things which you would need anyways, whether it's sunny weather or not so sunny weather.
Yeah.
It's all weather stocks.
What is typical, what also typical all-weather stock?
I would
What
say
can you-
food, tobacco, energy. You need energy anyways.
And you smoke also when the grand times are not good,
Absolutely.
yeah?
Absolutely. Defensive stocks means also whatever is tied to healthcare.
Yeah.
Because whether you have a recession or not, people get older and they get sick sometimes. So you need medicines, you need old age homes, you need a whole infrastructure which makes these stocks more resistant to any downturn.
And especially dividend stocks, stocks producing a dividend.
Yes, in general, this is correct, as long as the dividend is sustainable. You need to see those corporations who have a long track record of paying out healthy dividends will very likely be able to do that even if times get a little bit more difficult. But you can find dividend stocks which pay maybe 5% dividend, but they haven't paid any dividend 5 years ago. They might
So you have to be very
actually
careful.
stop.
You have to
Yes,
be very
you need-
careful because maybe
Yes.
just to pay out dividends, they organize this money from somewhere else, you know,
Right.
just to look good. And he will go to analyze these annual reports for the client and select the most suitable products.
You know, in a crisis, what is critical also is indebtedness. If a corporation is very much indebted, it will have a hard time surviving the crisis. So you need to select also companies, stocks of companies who are not too much indebted. You know also, and that could, I don't say it will, but it could be the reason for the next crisis. It's the very, very high debt. We have been living with extremely low interest rates. So everybody is getting more indebted because they don't have to pay much for the debt. But if this turns around, very soon you will run out of money, and then you have a very difficult period of time coming towards you. So you have to analyze which sectors are less indebted and which countries also are less
Countries,
indebted.
very important. Countries,
Absolutely.
you know. How important is Switzerland in these asset protection arguments? Because Switzerland is an important country. Swiss banks are very important for somebody who wants to have liquidity in a good place. To have liquidity, I think Swiss banks is the best you can have because they are not affected by bail-in laws. In Switzerland, there is no bail-ins. There are no bail-ins laws in Switzerland. Not in Switzerland, not in Liechtenstein, but all over Europe we have these bail-in laws. Bail-in means that the government, they have the European Union, all the countries of the European Union, they have laws in place since 2017. They can convert your money you deposited in the bank into shares of the bank. So if you have deposited money in a bad bank, when the bail-in comes to play, they will convert overnight. Your money is converted in shares. Overnight, you will become a shareholder of a bad bank. That's a high risk, so that's why our advice, select good Swiss banks. I have on my website a listing of all Swiss private banks. I have a listing of all Swiss banks offering private banking services, and there are around 100 banks, a little bit more than 100 banks are offering such services. You have to look how good are such banks capitalized. Tier 1 capital ratio, very important. You have to look that the bank are not involved too much in risky activity, not too much derivatives, not too much investment banking activities, not too much lending activities. Tier 1 capital ratio over 20%, and then you know, if I put this money in Switzerland in a Swiss bank who fulfills these criteria, you can be sure that your money is safe, you keep your liquidity safe. And then you can diversify also with currency. I think it's very important, the decision with which bank to work, you know, not work with the bank, for example, in a risky jurisdiction.
That's absolutely capital. I can only agree. First of all, Switzerland is one of the few countries with a debt ratio which is very reasonable. It is, in comparison to other European countries, in a much better shape. That is important. And as you said, the rule of law in Switzerland is very much entrenched. Rule of law means that you are protected as an investor against the state who would be tempted to take your private money. And
to steal your money,
stealing your money.
Bail-in means stealing your money.
It happened in some countries.
It happened in Cyprus, for example.
For example, in Argentina, where they just take your pension fund and they nationalize it, and then they use the fund for the nation. Of course, the nation then owes you money, but it's not the same than if it's in your own pension fund, which is independent.
Of course, there's a big, huge difference.
Absolutely.
You know, I have to tell you a story about this. When I was legal and compliance, the head legal of compliance in a Swiss bank before, I received some clients from Argentina. These were Italian clients in the third generation. They came to Zurich, and it was early 2000 in the Argentina crisis at the time. I think it was 2002, something like that, the Argentina crisis. Yeah. This family from Argentina came to visit me in Zurich in the bank, and they said, "We are so happy that we have this Swiss bank account because it's the only asset we have. We lost everything in Argentina. We lost the work, we lost the products of the work of 3 generations, lost just because of the crisis. So they are so happy that they had at least their Swiss bank accounts with a couple of millions, at least they were able to save a part of their assets with Swiss banks. They were really happy because they lost everything, such a crisis, taken away everything.
And you mentioned currencies. The Swiss franc is still one of the best, if not the best currency in the world.
Why is the Swiss franc one of the most important currencies in the world?
Well, the Swiss franc is the mirror of good governance. Switzerland is a very well-governed country. It is not overly indebted. It has the rule of law. You can go to court if you need. And the Swiss franc is and has always been a safe haven. That's why I advocate that every investor from overseas should have a relatively important part invested in Swiss francs. The sole effect actually to have some Swiss franc in a portfolio hedges you against downward movements of other currencies.
Yeah.
Just to remind you maybe, in the 70s we had to pay 4 franc 30 for $1. Right now it is less than 1 franc. That's a drop of 85% of the dollar.
Yeah.
It is unbelievable.
With the pound the same.
With the pound, it was 12 to 1 in the early 70s. It dropped to 10, and then the pound now dropped to 1.30. So let's just imagine you had 100,000 pounds at that time. You convert them into Swiss franc, and you just leave them in Swiss francs in a Swiss bank. Now you convert it back, you would get over £1 million back without even investing the Swiss francs. Now imagine that these Swiss francs would have been invested into top stocks like Roche or Nestle, you would have probably 3 times as much money. So it is important to hold Swiss francs in a portfolio. It's a very good element of diversification. That does not mean that you should not also hold dollars and euros. Because
or gold.
Obviously,
Gold is also currency somehow.
Yes. Yes, that's a very good remark. Gold in today's times can play the role of a currency. It has in the past, and over 4,000 years, gold has been the main asset which has kept the value of the assets of any person. It makes you independent from any currency moves.
And gold cannot be reproduced.
No.
So you can stamp money, you can
Absolutely.
print money, but you cannot print gold.
You cannot print gold, and interestingly enough, in today's times right now, gold is at an absolute high compared to most currencies. Not Swiss francs, not yet dollars, but in most other currencies like the ruble or the Turkish lira, we are at an all-time high.
I want to summarize what are the most efficient asset protection strategies in case of an economic crisis. Can you summarize, Olivier, what we should do, just as a summary, to be protected in a risky environment?
Enzo, I think the key is diversification.
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 Yeah.
A little bit of real estate, definitely gold in different ways, and some quality stocks. Always stick to quality, because remember, if there is a downturn, you might lose temporarily on even some very, very good solid stocks, but they will recover. If you have stocks which are too much indebted, or in any industry which has no future, then you might drag these stocks along for years and years without any real recovery. So quality, diversification, and you can protect yourself, of course, also with put options or other things, but mainly I would say diversification is your main element of protection.
Thank you very much. If you like information just like this, just make sure to subscribe to our YouTube channel. Please push the subscribe button and ring the bell so you can make sure to not miss any future videos. Thank you for staying with us. See you in the next video.